The panel that we will be holding right now is the carbon credit, financing the transition to low carbon economy. And joining us for this panel as the moderator, we have Don Franklin, the product specialist of wealth management at GTN Middle East Financial Services. And as panelists, we have Jai Waterman, the chief executive officer and co-founder at BlockStation, as well as Gerard Smith, the head of business development, digital assets at Nasdaq. Let's give them a warm welcome.
Hello, is it on? Good, thank you. Okay, good afternoon, everyone. I know it's just before lunch, so please bear with us. 45 minutes and then you can break away to eat. So thank you for joining us for our next panel discussion. As you can probably see, financing the transition to a low carbon economy. Now, we have had quite a lot of discussions already today around this same topic. So as we've already seen, transitioning to a low carbon economy presents both significant opportunity as well as enormous challenges. Opportunity we have seen rise in the way of new financing solutions. So we've seen the rise in sustainable investments, green bonds, green loans, all supporting the transformation in the global energy sector. However, simultaneously with that, we've also seen an enormous challenge because there is an estimated $4 to $5 trillion needed globally by 2030 to achieve the goals that have been set out in the 2015 Paris Agreement. So we can see there's a huge input from everybody that needs to take place. So one of the most important aspects in achieving this transition, from what I can see, is connecting people, capital, and ideas to drive solutions forward. And that's what we hope to achieve with our panel discussion today. So before we get into our questions, I would like to just formally introduce who we have on the panel today. As mentioned, my name is Dawn Franklin. I am product specialist of wealth management at GTN Financial Services. We are the leading fintech powered provider of global trading, investment, and wealth management solutions. And then I would like to introduce Gerard Smith. Gerard is head of product for digital assets in Nasdaq Market Technology. He's currently developing a platform for issuance, custody, and settlement of digital assets, focusing on carbon registry use cases. And Gerard has previously worked at the Hong Kong and London stock exchanges, focusing on post-trade. Welcome, Gerard. Thank you very much. And we also have Jai Waterman, the Chief Executive Officer of BlockStation, Inc. Jai has been leading the charge of deploying BlockStation's ecosystem technology to stock exchanges, depositories, financial institutions, and notably market regulators. A highly anticipated and timely solution, BlockStation is the only plug-and-play technology that can tokenize securities and assets, place them on the stock exchange, and enable public access. Today, he is here to share with us how technology can provide transparent, efficient carbon credit registry, cap and trade cycles to encourage global multi-exchange structures to strengthen the carbon markets. Welcome, Jai. Thank you very much. Okay, so to start our discussion off today, I think the best place for us to start is how can businesses prepare for the transition to low carbon? Jai, would you like to start us off on this one?
Sure, thank you for that. So in preparation for a low carbon and getting to net zero eventually, and hopefully by 2030, ambitious, what companies need to do is they've got two different paths. One is evaluating what you're currently doing in your business and identifying how you can change processes, change possibly vendors, in order to reduce your carbon emissions, reduce the amount of energy that you're using, go to more cleaner, renewable energies. And the other way, which is, from my perspective, more practical and is going to have a much bigger impact, is by buying carbon credits from projects that are specifically focused on generating carbon credits through, for example, it might be reforestry projects, or it might be through other initiatives to reduce carbon or to capture carbon. So just by simply going and buying those carbon credits on an exchange, a reputable stock exchange, which is coming down the pipeline, this is what you could do in order to prepare yourself for a net zero economy.
Perfect. Thank you very much. Did you want to add anything there, Gerard?
No, I think you hit the nail on the head there. I think businesses, the first step that businesses need to take is to start measuring how much carbon they're emitting before they can then come up with strategies for reducing their carbon footprint overall, which is a combination of reducing by looking at various different ways in which you can do that, looking at more efficiency in your processes, for example. And then the other part of it is to start offsetting on that. So if you make that commitment to net zero, then how are you going to achieve it if you can't achieve it just through reduction? So then we get into, okay, we can seek to source carbon credits in order to mitigate that. And
Absolutely.
and I guess I could get a plug in here for, you know, NASDAQ also has
Please do.
has plenty of technology in the ESG space which allows you to measure your carbon footprint and report that to your board.
Yeah. So moving on from obviously how businesses can prepare for this transition, what would you say is carbon finance? And do you think it's the driver for green innovation?
I think well, capital seeks innovation, and you know the best way for capital to be allocated to innovation is via exchanges and capital markets generally. The problem with the situation at the moment is that there is plenty of inefficiency, fragmentation in the carbon markets, and a lack of standardization, especially around the way in which credits are issued, transferred, etc. And there's also a lack of legal certainty over the kind of status of a carbon credit. You know, is it a piece of property? Is it something else? And that will differ from jurisdiction to jurisdiction. But I mean, the largest problem is that there is insufficient supply of carbon credits at the moment. So in order to have a meaningful impact on the reduction of carbon globally, we need to be able to efficiently channel capital to get to the projects that are going to help us achieve that that goal. And I think that the only way in which we can do that, and it might sound you know, funny coming from Exchange Group, is for the institutionalization of carbon markets.
Yeah.
So we need to bring that kind of standardization and certainty around carbon markets in order to get people to fully participate.
And Jay, would you like to add anything there? What would you say your view is on what carbon finance is? And do you believe it's the driver for green innovation?
Yeah, so carbon finance is essentially the process of financing your business and generating additional revenues through business by doing something great in the world, by reducing the carbon footprint, whether it's planting trees or reducing, you know, greenhouse gas emissions. And for example, Tesla, a significant amount of their profits actually come from the carbon credits. And without those carbon credits, they would not be so profitable. So this is, you know, a way of financing the business. And I kind of think of it in terms of, if you could just imagine, you know, we all love to donate to a charity, for example. And the thing with donating to a charity is you donate and you're hoping that there's going to be a result, right? And hopefully there is. But with the carbon credits, it's already been measured and audited that they've had an impact, and then you're paying for it. So this is a powerful way to contribute to something that you really believe in globally. So the, you know, carbon finance is really about financing the future for our future generations. That's what it's really about. It's about being able to do something great for the country, for the world, while conducting your business that's going to create, you know, generational wealth, not just in the terms of money, but in the terms of the quality of life that we all have.
I like that, financing the future for future generations. It's very, very insightful. Okay, so moving on from obviously what carbon finance is and do we believe it's the driver for green innovation, what type of projects does Sustainable Green Finance support? So if there are companies in the room or people that want to get involved in this, what would you say they're the type of projects that Green Finance supports? Let's start with you, Gerard.
There are so many.
Okay.
And like we were just discussing before the panel, that we learn something new about carbon markets every day. We tend to think of them as quite new, but they've actually been around quite a long time. And I certainly learned something new about carbon markets every day. And one of the things that you learn is about the different types of project. And, you know, you have avoidance projects, you have removal projects, reduction projects, and they can be afforestation is probably the one that we always springs to mind when we think of these projects, but there are many different types. And at NASDAQ, I have the advantage of being able to work with a carbon registry and standards setting institution that's part of our NASDAQ group. We're a majority owner in a Finnish-based company called Puro Earth. They specialize in methodologies around carbon removal, so actually removing carbon from the atmosphere.
Okay.
So that's one way in which you know, working with those standards bodies helps us to and registries helps us to kind of innovate around the technology that might be needed, not just for them, but for other carbon registries and markets as well. Some of the projects that they work around, methodologies around biochar, methodologies around geologically storing carbon, so taking CO2 out of the atmosphere and storing it underground, and various other ways in which you can bury biomass, for example, to stop it escaping. And those projects around carbon removal tend to be more long-term, and they tend to be, and that means, and the quality around those credits means that those credits tend to reach a higher price when they come to market, because people understand that the methodology is sound and that carbon is locked up for a long time. You know, can be permanently locked up. So that's one of the ways in which we're working with the market on that.
Fantastic. And Jay, what would you say are the main ways that people can get involved in these projects, and what kind of projects does the Green Finance support?
So just to add to what Gerald said is, you know, I kind of look at it in two kind of categories. One is a very business centric, where it's, okay, how can I adjust and tweak things in my business in order to optimize the reduction of greenhouse gases. For example, there's organizations that are responsible for disposing of air conditioning units, and the disposal of those units create these greenhouse gases that are emitted. But by coming up with different processes, they can reduce the amount of, you know, emissions that happen, and that reduction is converted into carbon credits that they can sell. So this is a very, you know, business oriented. But then you have social oriented ones where you're helping to bring clean drinking water to a community.
Yeah.
And these things can be extremely powerful and life-changing for communities across the world. And I think that the importance is making sure that the platforms that are available. So when we, like with BlockStation, we have our platform that allows the issuers to tell their story on the platform, to provide their disclosure, because in order to get these carbon markets the way that it needs to be, and if we look at public markets, the best public markets come down to the story. It's an exciting story. It's something that people can resonate with. And so what we need is, we need these carbon credit you know, organizations that are doing these projects to be able to tell their story, be able to be on a public exchange and have access to the markets, have access to the public as well as institutions. And that's what, you know, can get everybody involved and get this to where it needs to be.
Yeah. I think what you're both saying is there really is something for everybody. You know, there's so many options out there that no matter who you are, whether it's a business or an individual, you can participate in some way.
100%.
Yeah. Okay. So once we've looked at the different green finances options available, how can businesses participate in carbon finance, and who sets the rules for this? So Gerard, let's start with you.
Well, it depends on what you mean by rules.
Okay.
So it's a voluntary market.
Yeah.
So
But there is more regulation.
I think there is more regulation coming. And
Yeah.
in my view, that's a welcome thing.
Definitely.
So you can have rules, and what tends to happen at the moment is you have groups working on how things should work to try and enhance governance around whether it be issuance or trading or whatever it happens to be, around how those markets operate in a way in which people will perceive them as safe. So there are lots of different things going on. IOSCO have written papers. The UN, obviously, with respect to the Paris Agreement, sets out a framework for some operation of voluntary carbon markets. And then there's also the work done by the Sustainable Stock Exchange Group, helping people with guidance on how to do it. ISDA involved in understanding how derivative markets would work. You get the point. So there's
Absolutely.
also the other one I forgot to mention, the Integrity Council.
Okay.
Yes, obviously lots of people involved in ensuring that these markets run and operate, but no one's actually policing that stuff.
Yeah.
So in my view, what we need is probably at a national level, or perhaps at a supranational level, some level of regulation, because essentially what that means is that if you've got some regulation around it, you've got people overseeing how it works, then it encourages financial institutions and intermediaries to actually partake in that market when they understand the rules of the game.
Yeah.
And that prevents things like greenwashing, for example. So I think, I think regulation is probably going to take a while before it gets there. And that's not an excuse whatsoever to not participate in these markets. And but for the time being, there's a very kind of like diverse range of people taking interest in how they should be run.
Yeah. So regulation is on its way, at least.
I would hope so.
Yeah.
But where we see regulation emerge, I think the first people to set regulation around these markets are probably going to be pioneers and set standards for everyone else. So I think that's a good thing.
And Jay, obviously, from your point of view, what do you concur with what Jared says, or?
Regulations at different places in different regions. So for example, in Egypt, you have the financial regulators who are, regulating the market. They look at it as a financial instrument. And so as you've heard earlier, the Egyptian exchange is moving forward with their voluntary carbon market. Kudos to them for taking the lead on that. It's very important for stock exchanges to be involved in this. In terms of the regulation, because generally regulations or regulators in terms of the government is going to move at a slower pace than businesses. Stock exchanges are businesses. They're self-regulated organizations. They know how to regulate markets. They know how to make a fair marketplace. They have the broker-dealer network to make sure the AML and the KYC and all those things are taking place. The depositories are there in place to make sure settlement is happening. These ecosystems are already in place. What's important is to bring in new technology that provides what this market needs. This is a global problem that we need to tackle with regards to greenhouse gases and climate change, and we need a global solution, which means you have to have the local stock exchanges doing their part in terms of running those markets, but they need to be interconnected so that the world can connect and buy these carbon credits or list these carbon credits and have that exposure globally. We cannot solve a global problem individually. We have to do it together, and so everybody needs to be connected.
Absolutely. That actually transitioned quite nicely into our next question. So Gerard, I'll ask you something along the same lines. And what do you think the role of the stock exchanges is in bringing transparency and regulatory oversight into the carbon credit ecosystem?
Well, I guess stock exchanges in that sense are the critical kind of enabler. They're marketplaces, they know what they're doing, they run well, they're governed well, they can bring that integrity to these markets that perhaps is lacking a little bit at the moment. And so what do we need to do to make sure that exchanges have the right facilities to enable carbon markets? So we talked earlier about the fact that there are so many different types of project. So there's types of project, could be afforestation, could be various types of carbon removal. There are so many of them. And then there is the location of the project, there is the vintage, there is the permanence. So what you end up with is a very complex multi-attribute thing or asset if you've decided to make it an asset. So you need a way of exchanges need a way of providing technology that enables the buyers and sellers to match well by determining what attributes they're looking for. So you as a buyer may be looking for a project that was run in, I don't know, let's say Belgium, and you want it to be an afforestation project because that suits what you need as a corporate. So how do you go about finding that? So what we've been doing at NASDAQ in terms of our trading technology is tailoring our technology specifically for carbon markets, where buyers and sellers can search and find the right credits depending on various different multi-parameters that they need in order to find the right credit. So it's enabling those markets to come together. And we've also been, and the other point is the transparency that you get with the stock exchange in terms of price discovery. Liquidity as well is super important, because as a buyer you need to be able to know that you're not buying your carbon credit at an unfair price. So you need the price transparency and the data to be able to undertake that analysis before you go into the market to buy the credit. So part of what we've been doing at NASDAQ in relation to the work that we do with Puro is launching indexes specifically around carbon removal. So yeah, I think you know, exchanges are the enabler. They're the most obvious place to go to bring integrity and all of the kind of complex functionality that you'll need to make those markets work well.
Yeah, absolutely. And Jay, obviously BlockStation are in this space. So do you have anything further you want to add on that from BlockStation's point of view?
Yeah, I speak to a number of organizations that are in the business of producing carbon credits. So they have multiple projects across different industries, and their biggest complaint is that there's no proper price discovery. They end up having to do all of this good work and then basically take it to the streets to sell it to somebody who's buying it at 10 cents on a dollar because they don't have a reliable market that they can go to. So there's a huge opportunity. Right now, the space is small, but there's a lot of push behind it. There's 200 countries that have signed this Paris Agreement to move this initiative forward, right? Every single country should care about this. Everybody should, you know, this matters. This is our lives. This is our future. So ultimately, we need to ensure that we can encourage these projects to happen more. We want there to be a proliferation of them. The transparency will only help other issuers or other companies to say, you know what, I like what they did. I'd like to do the same thing. Copying over here is a great thing. We want somebody to copy reforestation. We want somebody to copy, you know, bringing clean water. This is not something that's supposed to be hidden. This is something that's supposed to be out there. And so that the transparency of not only the price discovery, but about the projects and what those organizations are doing to have an impact is key.
Definitely. So more regulation is on the way and a lot more transparency. And I think that's going to boost confidence with a lot of different people in the industry anyway. And obviously people that are wanting to do more from the carbon credits point of view. So my next question would be then moving on to technology. How do you both feel that technology can assist in creating carbon markets? Gerard, let's start with you.
So I just mentioned before, so when you think of carbon markets, you've got to think of it from a trading perspective, and then you've got to think of it from the issuance, kind of custody and settlement perspective. So the change of ownership of those credits. So you need to put the two together in order to create a marketplace. And we see from our conversations with clients around the world, different kind of models being formed around how they're going to do that. often with registry exchange groups setting up registries, which will then hook into other registries below, the type of registries like Vera, Gold Standard, and Puro, for example, in order to take those credits and make them available in a marketplace. But so I spoke about the technology that we've already built on our trading systems to enable that multi-parameter matching to easily be able to match buyers and sellers. But my day job is building a platform which is around the registry technology. More generally speaking, it's a digital asset issuance, custody, and settlement platform. But the first use case that we're running with at the moment is carbon credits, and specifically, we're going to be replacing the technology that Puro Earth currently use with this new technology, working with them. It's very kind of symbiotic relationship.
Exciting.
So that technology we hope to be launching in June this year.
Okay.
And then we'll be able to kind of like offer that technology more broadly to the marketplace, to exchange groups that we work with already. So technology itself is built using smart contracts. And then underneath a kind of like application layer, you can have a DLT blockchain, or you can decide to run smart contracts on top of a centralized ledger technology. So there's various different options in how you might deploy the technology, depending on one, your budget, and whether you strategically want to get into kind of like sophisticated digital asset type things. But I guess the kind of beauty of that technology that we're building is that you can extend it then to other asset classes. So you may want to take the first step into digital assets and by setting up a carbon market, and then later add other asset classes onto that. So, for example, we'll be working with government bonds with a CSD in South America soon as well. So, yeah, that's what we're
there's
doing.
a lot happening behind the scenes at NASDAQ at the moment then.
There always is. Yes,
Yeah.
absolutely. We're always
And
innovating.
that's something obviously I think a lot of people may not have understood about NASDAQ before hearing that today, that there's a lot in this space that you are currently doing.
Absolutely. I mean, we see, so not just in the technology space where we're making sure that our trading platforms are fit for carbon markets and building the registry technology. But we're also looking across NASDAQ. We've got the ESG technology, which allows you to measure your carbon footprint. We're doing stuff in our markets to launch products like the indexes that we spoke about before. So there's various different kind of like aspects to not just carbon, but ESG kind of themes more generally right across the business. So in the markets that we run, in the technology that we run, and in the corporate services that we offer.
So the next question that I wanted to pose, because I'm conscious of time, at the moment we see that carbon credits are standardized. Do we need to see them more tokenized and moved into that direction? Jay?
Yeah, so I think, taking into consideration, this is a global market. The tokenization and creating smart contracts with these carbon credits is critical because we don't want the carbon credits to be stuck in a regional, in just a region. This is something that should be able to trade globally. And when we want to create the trust globally, then we need to have something and a mechanism, a technology that everybody can trust and that can be settled cross-border without delay. And so tokenization can help with that, is a big part of that by taking these carbon credits and putting it on the blockchain. And then of course, the other aspect, the other pieces of the technology, I'll just add on to what Gerald said with what they're doing with the NASDAQ. So the other very important thing, which we do at BlockStation, is we make it very easy for the issuers. We've already done this in securities markets to make it simple for the issuer to create their prospectus. And we call it a click-through prospectus. So, and it's almost at the stage, because now we've implemented artificial intelligence into it, where we can almost just click a button and the system will take all of your information and generate your disclosure for you. So what we want to do is we want to make it extremely simple for issuers, projects to do exactly what it is that they're doing, to make the process simple for them so that they can, raise their capital, continue with their projects, issue their carbon credits or whatever it may be. And tokenization is a key piece of that.
Okay, very good. So I am conscious that we're running quite low on time. I just wanted to open up and see if anybody in the audience has any questions for Jay or for Gerard, especially when it comes to the finance and aspect of carbon credits. Are there any questions at all? Okay, we do have one at the back here. Do we have a microphone? Thank you. Just at the back here, I think.
Hello. Thank you for your explanation and oversight. I would like to understand why carbon credit is needed
Why carbon credit is needed?
and for which economies it is referred.
So can you just repeat that? So why carbon credit is needed and
Why carbon credit is needed and which markets or economies it is relevant.
so why carbon credit is needed and which markets and economies it's relevant for?
Yes. exactly.
Okay, okay.
Thank you.
Jay, would you like to take this one?
Sure. Carbon credits are needed because businesses generally have to focus on generating profits for their shareholders. This is the focus. And when a business has to focus on generating profit, and that's what you're measured by, then that's what you focus on. And sometimes you ignore the environmental impact, you ignore the social impact. Unfortunately, this has to change. And so as a result, what we do is we incentivize companies by, caring about the social and the environmental impact by providing them with the ability to issue carbon credits, which they can sell, which gives them more profit. I gave the example of Tesla earlier, because Tesla is using, creating electric vehicles, which looks to reduce the amount of carbon emissions from burning fuels, for example. Then they have been granted carbon credits as a result, which they sell for their profits. So this is very important to incentivize organizations to reduce their carbon footprint, as well as to incentivize organizations to go and create projects like reforestation to, to help, reduce, pull carbon out of the air, give us cleaner air to breathe, etc. So it's needed to incentivize people to do more than just commerce to generate profit. We need to combine them together and be more holistic, that doing good is what helps you to gain more profits.
Fantastic. That's a very good answer. Did that cover your question? Perfect. Sorry, Gerard, did you want to add anything to that?
I think that was a great answer.
It was
There's
perfect,
nothing
yeah.
much I can add to
There's
that.
not an awful lot you can add to that. Okay, I'm conscious that we're almost run out of time. So what I would like to ask is if you could both just give us your final thoughts, your one takeaway on what you think people should understand about financing the transition into a low carbon economy. So Gerard, let's start with you.
Yeah, so I was thinking about this last night, and I was thinking that actually the Middle East is a great place for these type of markets to emerge in a really interesting and safe way. Because if you look back maybe 20 years at how capital markets have developed in this region, the development's been astonishing. And so we now have in this region, sophisticated capital markets, which are key to being able to kind of make these markets successful. Together with that, you have a huge opportunity in this region in terms of supply of carbon credits from renewable sources. So you put the two together and you've got a recipe for success. And if you add NASDAQ technology to that, then I think that would be the perfect mix.
Perfect. Jay, just before we move on to this, sorry, did we have another question, did you say? Okay.
No, there's no another question. The question, the second part was which economies it is referred most. My question, I need to elaborate a little more.
Okay.
That where it is applied, or it is the developed economies are giving carbon credit to the underdeveloping or developing economies. What is the mechanism when we can actually, use as a product to the people. We are here in Oman, we might be in Africa, might be in South Asia, where these are the developing economies. So what is the mechanism to actually avail the carbon credit? How it is going to be traded, whether the participation of the retail investors or individual investors can be, opened. This is what we need to understand.
Okay, Jay, did you want to elaborate on that one?
Sure. So it's affecting all economies. There's 200 countries that have signed this Paris Agreement to help reduce climate change by reducing greenhouse gases. Okay, so each country, based on the amount of carbon that is producing, has set their own goals in terms of what their reduction needs to be. And they set their own timelines in terms of, how much greenhouse gases they want to reduce within a specific period of time. Now, for each country, they're supposed to measure and monitor what is going on in terms of the amount of reduction and report that. And they all report that together so that they have all the statistics combined for everybody to see and everybody to measure and monitor, how each country is doing with regards to their goals and objectives. Now, once those carbon credits are created by each individual business within the various countries, then those are able to be sold. The best way of all of it, it seems like, and I'm very happy based on all the events and all the different discussions today, everybody agrees that stock exchanges are the place where these carbon credits should be available to trade. And very specifically, from my perspective, is we should not isolate them to a specific country. This needs to be a global initiative. Each exchange needs to have their own identity and be able to, bring on their own projects and issuers. But at the same time, it needs to be accessible to other clients, other investors, whether retail or institutions across other regions through their exchanges. And so that's what our platform provides. It provides the ability for the entire life cycle, from the issuer, the depository, the stock exchange, the broker, and the investor, to all participate in the life cycle, including the process of these issuers to put their carbon credits or create their carbon credits on the platform after being verified by the verifiers. So it's really about, it impacts every single community, every single economy, every single country. It's global.
Jared, did you want to add something?
Yeah, sure, because I think the gentleman mentioned something about retail markets and retail
Yes.
participation. So let's be clear about carbon markets as they currently are. This is not a market in which you see much retail activity, and it's not a market in which you in fact see much secondary market activity at all. So what's typically happening is that the issuers of credits are coming through into the registries and they're made available sometimes on a platform, sometimes through an auction. But what happens is the corporates buy those credits and then they retire them. So they're out of the market, because
Right.
the corporate needs to be able to state clearly and have reference to the carbon credit that they purchase actually being retired,
Okay.
and then stating that in their annual report, etc. So the challenge is to create the liquidity in the secondary market activity in order to make these markets function better. So rather than just corporates going direct to projects, we need to introduce more activity so that we can get the depth of pricing, transparency, and all of the good things that come with capital markets into carbon markets as well. And that only comes when you go onto exchanges.
Absolutely. Thank you very much. So I just want to check, does that cover your question? Okay, thank you very much. So Jay, if we can just get your final thoughts as well before we end the panel discussion today. So is there anything further you wanted to add?
No, just I really appreciate being here, and I'm very happy at the consciousness that is in Oman here, through all the different panelists, through conversations that I've had with people. We're on the right track. Now, we're not, globally, we're not actually on track in order to meet the global initiatives right now. But based on the mindset that I see here, I know and I understand that it is possible if everybody takes initiative, especially the stock exchanges. This has been the center of all discussion. Stock exchanges need to take action and move forward with creating their carbon credit marketplaces. You know, we're here to also help you and assist you with that process. There's more information. If you guys open up the pamphlet that the Arab Federation of Capital Markets left on your table, the last page, there's a trading carbon credits on the stock exchange. You can scan it. And there's a white paper that we developed in conjunction with the Arab Federation of Capital Markets, where you can learn your role as a stock exchange or a broker or a depository. Whatever role you play, you can understand exactly how you fit into the marketplace and how you can do your part, and how BlockStation's technology will help you to do that.
Thank you very much. So I hope you have found that inspiring. Jay and Gerard will be available after the session. So if you have any further questions, then please feel free to approach them around as we're networking. But thank you very much. I know we need to get off the stage right now. So thank you very much as well to our hosts. And it was a pleasure to host the panel discussion. Thank you very much.